Hello everyone. Let's discuss quickly about the monetary policy, how it changed the Bank Nifty's momentum. Then in addition, we will discuss about the pre-market report for 12th September 2023. First, in the last 1 month, the negativity in the banking stocks and in the Bank Nifty overall was created and started from the last monetary policy meeting. I already explained in detail how and why it was negative and how much it will cost the bigger banks on the monetary policy meeting video. If anyone fancy having a look, I'll attach in the description below. If not, no problem, I'll tell in short. On 11th August, instead of increasing the interest rate, RBI introduced the new way 10% incremental CRR. In this way, they thought that they can control the money flow into the market, so does the inflation. But the problem is, this will cost up to 150 crore rupees every month for every single large Indian banks. So, longer the policy, it will affect more the profit on the banking stocks. That's why banking stocks was under severe pressure throughout last month. Including yesterday, Nifty closed positive for the 7th straight session, but unlike that, Bank Nifty closed only for 3 consecutive positive close. If we exclude yesterday, it's 2 versus 6, so that's the difference between Nifty and Bank Nifty. Then, during weekend, RBI announced that they are going to remove this incremental CRR in 3 phases. First, 25% fund release from September 9th onwards, which was last Saturday. Then the next 25% on September 23rd and the final 50% will be released on October 7th. Basically, RBI announced that they will remove it completely by October 7th. Thus, we can project this will affect approximately just 250 to 300 crore rupees profit only on big banks like HDFC, SBI and ICICI, and that's the reason RBI removed some and promised to remove completely the things that burns the banking stocks, which in turn made them to join the party with Nifty, which indeed finally made the Nifty to cross 20,000 mark. Then, before our market opening, China released their new loan data. Change in the total value of outstanding bank loans issued to consumers and businesses. Last month, this data came as just around 350 billion yuan, which in turn affects the global momentum. But for August month, that increased to over 1,360 billion yuan, which was also above the expectation. This made all the Asian market positive, so does it contributed positive on our metal stocks. Sector-wise, except media, all other 12 out of major 13 closed positive. And finally, after 6 days of over 8,000 crore rupees selling, FII turned net buyers. The net bought for near 1,475 crore rupees and DII also net bought around 370 crore rupees. Then after that, for the second consecutive day, all 4 major European index also closed positive. So it's not just Indian market, whole global momentum is okay. Coming to US, taking the global cues, it opened positive. Around 11 AM Eastern Time, both Reuters and US New York Fed released the expected consumer inflation data. Here again, please note not the actual one rather than expected one. In both the case, it came as 3.6%. Last month they said 3.55%. The actual inflation comes only as 3.2%. So this positive inflation expectation made all 3 major index further positive. And the highlight of the day, Morgan Stanley upgraded the Tesla stock price to overweight from equal weight. This made that stock to increase over 9%. At the end of last night, Dow Jones increased by 0.25%, S&P 500 up by 0.67%, and whereas Nasdaq was increased by 1.14%. In case of VIX and oil, it's roughly same as Friday. At this time of this video, Brent crude oil was traded at $90.5 US per barrel and WTI crude oil was traded at $87 US per barrel. In terms of Indian ADR, both banks and both IT closed more positive than Indian market. So can we consider this as whole positive for both sector? The answer is we may consider for banks but not sure fully for IT stocks. The reason is after the US market and ADR closing, Oracle released their earning and future guidance. Once those were released in the after post market, Oracle stock price dropped over 9% in 1 hour period, and we can say it's negative as well since year to date Oracle increased over 50%. So there is a chance it might due to the profit booking. So let's see which will happen. Then about Gift Nifty, because of the super positive Nasdaq close at 3 a.m. Indian Standard Time, it closed at 20,118, equating that to our spot market. It's kind of indicating 50 to 60 points positive or gap up opening. So that's what happened yesterday on global market. Now let's see some Indian sector and stock specific info. First, I hope most of us know this. At present, in the last few months, from exporting the steel products to China, India turned as importers from China. In order to prevent this, yesterday, India imposes the anti-dumping duty for Chinese steel. This I consider as positive for steel stocks. Second, on July 25th, L&T announced the share buyback. Now, yesterday, after the board meeting, they increased the buyback share price from less than 3,000 to over 3,200 rupees per share. Third, if required, please pause and have a look. Yesterday, Jefferies announced positive on those following auto stocks. Finally, as per open interest, HCL Tech, Power Grid, Adani Port and SBI Card got the long build-up. ONGC, BHEL, IEX, Torrent Pharma and Shree Cement got the short build-up. So usual, be cautious while trading in those. As a summary, Nasdaq positive close along with a positive area stock close is the encouraging thing for IT stocks, but the impact of Oracle results is still unknown. However, Gift Nifty is indicating a positive gap up opening of 50 to 60 points. Let's see. Then, regarding the things to look out, during the market hours, Europe's economic sentiment is due. Then in the evening, India's consumer inflation is due to release. At present, as I said, the expectation is just 7%, which will be 0.44% less compared to that of the previous month. Just for info, last month, for July month, economists predicted 6.4%. However, the data came as 7.44%. Then in the night, EIA's short-term energy outlook is due. Coming to technical, Nifty made another positive green candle with a higher high and higher low formation, and in the process it touched the new all-time high of 20,008. Then at present, the momentum indicators on both daily and hourly time frame are in sync with the price action. Thus, I expect the positive momentum to continue. However, Fibonacci numbers indicates the overbought condition and the trade volume yesterday was less than the average volume. Here, this is important. In the bullish market scenario, most of the time, trade volume decrease always will result in consolidation. So, there is a high probable we might expect some consolidation. On the upside, next, Nifty to target levels of 21,000 from short-term perspective. In terms of levels, 19,865 to 19,810 is the crucial support zone, while 20,200 to 20,250 shall act as the immediate hurdle zone. Then for Bank Nifty, it also witnessed positive price action and is on the way to retest its recent swing high of 46,400. As I said earlier, it has been a laggard and hence a divergence is visible among the sectoral indices. Sooner rather than later, it is likely to align with Nifty and we expect the positive price action to continue. Momentum indicators on the daily and hourly time frames are in sync with the price action and hence we are likely to a sustained up move. Thus, Bank Nifty has the support at 45,150 to 45,300 while resistance is placed at 45,750 to 45,900 levels. Coming to the open interest data, on the call side, the maximum open interest is at 20,000 but at the same place got significant put options as well. Thus, the next maximum call option is at 20,100. So, 20,100 is the immediate hurdle. While on the put side, the highest open interest is at 19,900 strike price. So, 19,900 is the support to look out for. On the other hand, Bank Nifty has support at 45,150 to 45,300 while resistance is placed at 45,750 to 45,900 levels. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.